Welcome back to Boni's Life, where we decode the crypto markets with precision, passion, and just enough wit to keep you awake during those late night trading sessions. I'm Boni, and if you're watching this on August 7th, 2025, you're about to get the most comprehensive 24-hour crypto trading roadmap that'll make your portfolio thank you tomorrow morning. Today's episode is particularly special because we're sitting at one of the most fascinating crossroads in crypto history. Bitcoin is dancing around the $115,000 level like it's trying to decide whether to crash the party or become the life of it, while regulatory winds are shifting faster than a day trader's mood during a flash crash. And trust me, after analyzing the past 24 hours of market data, expert commentary, and global events, I've got some insights that might just change how you approach your next trades. Let's start with the elephant in the digital room, Bitcoin. As I'm recording this, BTC is trading at $115,038, up a modest 0.05% in the past 24 hours. Now, before you roll your eyes at that seemingly insignificant movement, remember that we're talking about a $115,000 Bitcoin. A 0.05% move at these levels represents serious money, and more importantly, it tells us something crucial about market psychology. Ethereum, our favorite smart contract platform that's been trying to convince everyone it's the better store of value, and we'll discuss VanEck's fascinating take on that later, is currently trading at $3,720, up 1.02%. That's actually quite significant when you consider the broader market context, but here's where it gets interesting. And this is where my years of market analysis really come into play. The altcoin market is telling us a story that's different from what the Bitcoin and Ethereum headlines suggest. POL, formerly known as Matic, is up 5.68%. That's not random market noise. That's institutional money rotating into specific narratives. Now, let's talk about the global events that have been shaping our market over the past 24 hours. Because if you're trading crypto in 2025 without understanding the macro environment, you're essentially playing poker blindfolded while the house counts cards. The biggest story dominating market sentiment is Trump's August 8th deadline for Russia to agree to peace in Ukraine or face new sanctions. I know, you might be thinking, Boni, I signed up for crypto analysis, not geopolitical commentary. But here's the thing, crypto markets in 2025 are no longer the isolated, purely technical playgrounds they once were. The data backs this up. As the August 8th deadline approaches, we've seen the crypto market cap fall 0.63% to $3.71 trillion. Bitcoin dropped to $114,347. Ethereum fell 1.30% to $3,601. And XRP, always the drama queen of major cryptocurrencies, tumbled 2.65% to $2.95. The regulatory landscape is also shifting dramatically, and this is where things get really exciting for us as traders. The CFTC and SEC have launched what they're calling a crypto sprint, implementing the president's working group on digital assets recommendations at breakneck speed. Speaking of capital allocation, let's dive into some of the most insightful expert commentary I've gathered over the past 24 hours, because understanding how the smartest money in crypto is thinking gives us a significant edge in our trading decisions. VanEck just published their July crypto market recap, and their analysis on Ethereum potentially becoming a better store of value than Bitcoin is absolutely fascinating. VanEck's argument isn't based on emotion or tribal loyalty. It's based on hard data and evolving market dynamics. They point out that Ethereum's inflation rate has dropped to just 0.2% as of March 2023, while Bitcoin's inflation rate was sitting at 3%. Think about that for a moment. The really interesting part of VanEck's analysis focuses on treasury flexibility. They argue that companies can use ETH in more flexible ways than Bitcoin, staking it, earning network rewards, tapping into DeFi tools to boost returns. Meanwhile, Bitcoin treasuries mostly rely on lending or options trading. Mike Novogratz, the Galaxy Digital CEO, who's been in this space longer than most of us have been spelling cryptocurrency correctly, has a different but equally insightful perspective. He believes the crypto treasury craze has peaked. We are seeing a tremendous amount of opportunities there, he said, but I think we've probably gone through peak treasury company issuance of new companies. Tom Lee from Fundstrat is maintaining his incredibly bullish Bitcoin price target despite recent weakness. I think Bitcoin should really build upon this $120,000 level before the end of the year, Lee stated. $200,000, maybe even $250,000, is still on the table. Now let's get into the technical analysis that's going to guide our trading decisions for the next 24 hours. This is where we separate the wheat from the chaff, the signal from the noise, and the profitable trades from the expensive lessons. Bitcoin is currently facing critical resistance at $115,500. This isn't just a random number I pulled out of thin air. It's a confluence zone that includes a descending trend line, the 100-hour simple moving average, and the 50% Fibonacci retracement level from Bitcoin's recent decline. The technical structure shows Bitcoin maintaining a lower high, lower low pattern that keeps short-term momentum tilted bearish. The relative strength index on shorter time frames continues trading below 50, indicating ongoing selling pressure among day traders. But here's the crucial detail that many traders are missing. The selling pressure is orderly, not panicked. Glassnode's on-chain data supports this technical picture. They report that 70% of short-term Bitcoin holders remain profitable, and short-term holder spend volume has dropped to 45%, falling below our neutral market thresholds. The support levels we need to watch are $112,500 and $110,500 based on recent trading activity. If Bitcoin breaks below $112,000, we could see a test of broader support around $108,500. Ethereum's technical picture is actually more bullish than Bitcoin's right now. ETH is showing relative strength, trading above key moving averages, and demonstrating the kind of price action that often precedes significant moves higher. All right, this is what you've been waiting for, the specific trading strategies and technical triggers that could generate profits over the next 24 hours. Remember, these aren't financial advice. They're educational insights based on current market conditions and technical analysis. For Bitcoin, I'm watching for a potential breakout above $115,500 with volume. If we see Bitcoin clear this resistance level with conviction, and by conviction, I mean volume that's at least 20% above the recent average, then we could see a quick move toward $117,000 and potentially $120,000. However, if Bitcoin fails to break $115,500 and instead breaks below $114,500, then we're looking at a potential move down to test the $112,000 to $110,500 support zone. For Ethereum, the setup is potentially more straightforward. ETH is showing relative strength, and if Bitcoin can hold its current levels, Ethereum could lead the next leg higher. I'm watching for a break above $3,750 with volume as a signal to go long with a target at $3,900 and a stop loss at $3,650. The altcoin space is where things get really interesting for the next 24 hours. Paul's 5.68% gain isn't happening in isolation. It's part of a broader rotation into Layer 2 and scaling solutions. Solana at $169 is sitting at a critical juncture. A break above $175 could signal a move toward $185 to $190, while a break below $165 could see Sol test the $155 to $160 support zone. Before we wrap up our trading strategy discussion, let's talk about the elephant in every trader's room: risk management. I don't care how good your analysis is or how confident you are in your trades. If you don't manage risk properly, the market will eventually humble you in ways that'll make you question your life choices. Given the current geopolitical uncertainty with the August 8th Russia deadline, position sizes should be smaller than usual. I'm recommending no more than 2 to 3% risk per trade, and that's for experienced traders. If you're newer to crypto trading, keep it at 1% risk per trade maximum. Let's talk about institutional flows, because understanding where the smart money is moving gives us a significant edge in our trading decisions. The data from the past 24 hours tells a fascinating story. Corporate Bitcoin holdings surged in July 2025, with public and private companies adding 107,082 Bitcoin to their treasuries. That's not just a number. That's a trend that's accelerating. A Nickel Digital Asset Management survey suggests around 10% of S&P 500 companies will establish Bitcoin treasuries at some point. Think about the implications of that for a moment. As we wrap up today's analysis, let me leave you with the key takeaways that should guide your trading decisions over the next 24 hours. First, the crypto market is at a critical juncture. Bitcoin's ability to hold above $115,000 despite geopolitical headwinds suggests underlying strength, but a break below key support levels could trigger more significant selling. Second, the regulatory environment is becoming increasingly favorable, creating fundamental tailwinds that support higher prices over the medium to long term. Don't let short-term volatility distract you from these longer-term positive developments. Third, institutional adoption is accelerating, creating a different type of demand profile than we've seen in previous cycles. This suggests that any significant dips should be viewed as accumulation opportunities rather than reasons to panic. Fourth, risk management is crucial in the current environment. Position sizes should be smaller than usual, and you should be prepared for increased volatility around geopolitical events. Finally, remember that successful trading isn't about being right all the time. It's about managing risk effectively and positioning for the highest probability outcomes based on available information. The next 24 hours could be pivotal for crypto markets. Stay alert, stay disciplined, and most importantly, stay educated. The market rewards preparation and punishes complacency. If this analysis helped you understand the current market dynamics and potential trading opportunities, make sure to hit that like button, subscribe to the channel, and ring the notification bell so you don't miss our daily market updates. Your engagement helps us reach more traders who can benefit from this type of in-depth analysis. Drop a comment below with your thoughts on today's analysis or any questions you have about the current market setup. I read every comment and often incorporate your questions into future episodes. Until tomorrow's market update, this is Boni reminding you to trade smart, manage risk, and never stop learning. The crypto markets never sleep, and neither should your education.